So what are we gonna do? We're gonna become more independent. Let's talk about a family office. Now, a lot of people have asked me about family office, man. So it's like, I want you to talk about family office. So why don't you do a show on family office? And there's two reasons why I didn't do a show on family office. The first one, I'm gonna be honest, because my family doesn't have one, and I don't like to really talk about things that I don't do, so to speak. But it's something that I'm looking to achieve in my lifetime. That's why this episode is called Family Office, a lifetime achievement. And the second reason that I didn't want to really discuss family office is, I think unless you have straight up training, administrative business training, administrative, if you have business training, executive business training, schooling, it's going to be very difficult. Now, how do you get training? You can pay for it. How else do you get training? You can start a business. You can start an LLC, and read the statutes on LLCs, and understand the structure of that entity, and it's easy. It's easy. You can start a business trust and structure it in a way to where there are different, what we call verticals. There's different initiatives. There's different things that the individual, structure or the group of structures are involved in, all for the same purpose. And what is that purpose? To grow wealth. Ultimately, to grow wealth. What is the family office? Its purpose is to grow wealth, but it's a privately held company, or a lot of times it's a trust. It's a business trust, but it handles the investments and the investment management and the wealth management. You have investments and you have wealth. You have wealth in different forms: gold and silver, maybe cash. Mostly it's going to be land, maybe some stocks, something like that. That would be considered more on the side of wealth. Then you have investments. There's funds that have been allocated or appropriated or sequestered specifically for the purpose of investments, and properly invested, these funds grow in value. So as the investment account or accounts grow in value, you would understand that it would become cumbersome for, an individual trustee, or maybe even, a board of trustees who do not have financial, executive, business administrative, anything type of training. It can be difficult. What is a family office? It's basically a company that's created by a family. The family office capital is composed of, like I said, a specific portion of the family's own wealth. Some family offices also handle tasks such as managing household staff, making travel arrangements, specific property management, day-to-day accounting, and payroll activities. Management of legal affairs, family management services, family governance, financial and investor education, coordination of philanthropy and private foundations. Also succession planning. A family office can cost over $1 million to operate a year. So typically a family's net worth usually exceeds $100 million in investable assets. Remember I said you have wealth management and you have investment management. So we're talking about some money. Really what it is a office comprised of accountants, business professionals, professional investors, those, groundskeepers. It's a company. It's a company that handles all of the aspects of investment. Let's say one of the investments or one of the assets of the family office is a large property. It's a large estate, or maybe it's even a large apartment complex. We could say 50, 75 units, something very large. There would be an a division or team within the family office that handles the management of these properties or this specific property, but there'd be more properties. And that team could essentially have the authority to hire groundskeepers, purchase vehicles, things of that nature for the management of and maintenance of the property. Now, how I'm going to relate this. If you have a family trust, right? You have a family trust, that family trust will likely have involved with it, especially if you're, dealing with private structures, an asset trust, possibly a business trust or several, maybe even several assets trusts, and then all of these trusts basically, in the case of the asset trust, the asset would manage or hold the title to the assets. In the case of the business trust, the business would either function as directly or own and control interest or shares in a public, in a public business, a public corporation or LLC or something of that nature, specifically to, generate income. Such income will be for the benefit ultimately of the entire family, the family estate. Now, if you scale that down a little, right? Let's say the family trust gets very large. There's a lot of beneficiaries. Let's say there's a lot of different asset trusts. The estate owns a lot of land. It owns several businesses, straight up, privately held. And family offices are privately owned. They're privately held. They're not publicly traded. They're not. There's no way you can buy stock in these companies. So let's say the family estate has a lot of real estate. It has a lot of property, business, or income-producing property, whether it's residential or commercial. But commercial is 5 units and up, so it's going to be a lot of commercial properties. There may be some businesses that the business trust owns. There may be a mechanic shop. There may be a corner store. There may be a copy center. There may be all these different businesses. Who knows? In all of these businesses, whether or not family members work there, their profits feed the family estate. So when these family estates get large enough, they are too cumbersome. It's too much going on for the board of trustees to handle it. It's to the point where you realize that you have to hire other people to handle this stuff, right? And then it gets to the point where you're like, we're employing so many people. We might as well organize this in a structure that's, more beneficial, at least with regards to, expenses. And that's a family office. And then the family office will have like a director. And then there would be administration. And then they would have departments. There's the department that handles, the management of all of the properties, commercial properties, any, personal property, whatever. Residential, doesn't matter. There's a division or department in the family office that manages all of the dealings with all of the companies or corporations that the estate has interest in. There's a department or division that handles all of the investments, like trading the stocks and anything that's investment oriented. A business is an income. It's an investment, but once it's producing income, it's a business. So like investment stocks, bonds, maybe even loans. There could be private loans or venture capital loans or something like that. As well as the family could also have a family foundation. There could be a department within the family office that these people, it could be 5 or 6, these people, all they do is administer and run the family foundation according to the indenture, the trust contract indenture, or the governing instrument of, that particular foundation. See, here's the thing. After a certain number of generations, this is what happens. When you deal with multi-generational wealth, you start talking about things like family offices. You start talking about things like endowments and things of that nature. Maybe possibly getting the family name on a university's library or something like that. Because once the estate begins to produce the income of that results from the proper administration through multiple generations of wealth, it becomes too much. It becomes too much. And in that family office, there will be an accounting department. And that accounting department will have 1 or 2 accountants, and then there'll probably be a tax attorney, a contract attorney, and maybe even a litigation attorney on retainer. And that's where, family offices that can cost over $1 million a year to operate. Easily. So usually you're going to need funds in excess of $100 million. Assets, capital, whatever. Because, the employees of the investment department, the traders or the, whatever they're getting paid for to make money, to take money and make money with that money and grow the money that they were given to make money with over time and collect a salary and maybe possibly bonuses off of, the money that you make the family office. So in order to sustain, annual operation costs that possibly can exceed $1 million, you're going to have, not only a nice amount of income producing businesses, income producing property, and income producing investments, in order to sustain that type of operating cost. And you got to pay all the employees or contractors, however you set them up. And there's a lot of fees. There's billable hours when you're dealing with attorneys. Depending on what's going on. A lot of labor costs if you're dealing with large properties and stuff. But you get to a point in the administration of your private estate to where we, as the family, we can't do all this. We're the generation that grew up with a family estate, with a family trust. We heard about it all the time. I heard about my family trust all the time. I heard about the money I was going to get. They told me that they put life insurance on me when I was a baby. I told them they were crazy. But we're the generation that grew up with the family trust, and we don't have student loans. I don't know what they did, but they paid for my college, any education that I wanted to do. They paid for it. Who's they? The board of trustees. Board of trustees is what? My family trust that I'm the beneficiary of. We don't have debt. We don't have that hunger and drive to change things for the better because we grew up and it was already better. And I don't really have any interest in being the trustee. I don't really have any interest in running a family foundation. And you have to think in this manner because if there are unrealistic expectations placed on successors or successor beneficiaries of an estate, the next generation or whatever, there's unrealistic expectations placed on them or other individuals within the family with regards to the administration or really the time that is expected from them with regards to the administration of this family estate or this family trust or this business trust or this, this asset trust. It causes conflict. It can cause disunity and create resentment within the family. And that's what I tell a lot of trustees in the private. First of all, the people closest to you that know you the longest, they're going to be the last people to listen to you because they know you. The vision and representation and character that they know with regards to you is seasoned. It's set in. It's going to take time and some consistency and some different results that you show and produce before they really start asking you questions. And that's when you start talking about this information. And number two, you may think that someone is intelligent enough or they have the capabilities or maybe even they have the time or something for this information. You can be a trustee and you can help administer the estate and stuff. And, that can be pressure to them and they have no real desire, regardless if they have the applicable knowledge or skills or capabilities that you're forcing upon them ultimately, and they're not interested. That causes disunity, resentment. You don't want to disunify the family. The family trust, the family estate is for unification and reunification of the family. So it's something that ends up being implemented sooner than you think. Now, you already understand. Ultimately, you run the family office. If you're the trustee of a private estate, it's just not an actual structure that is a family office. But you, as the board of trustees, we run all this stuff. But as the wealth grows and as the estate grows, and it does, and I'm telling you, when you start getting to that point, it's like, man, it's a lot of documents, it's a lot of paperwork, it's a lot of files, it's a lot of logins, it's a lot of passwords, it's a lot of mailings, it's a lot of different forms, it's a lot of different submissions, it's a lot of different things. And eventually it gets to the point where you realize, like, yo, I'm kind of, doing a part-time / full-time job with this stuff. And it's natural. When you realize, or the board of trustees realizes, then they want to draw more salary from the estate. Hey, I need more benefits. I'm giving more of my time. And you gotta be aware. If you're serious about this stuff, if you're serious about, private trusteeship, if you're serious about the administration of a private structure that's more powerful than any legislative structure that ever existed and ever will exist. If you're serious about this, it's something that you have to think about, at least think about it. Like, what is the point where this estate has enough wealth and income to where, I kind of got to start hiring people to handle it. Right? And then you realize you get to a point, right, where let's say you're contracting an accounting firm, right? You're contracting an attorney from another firm, right? You're contracting an attorney firm. You're contracting an accounting firm. Maybe even contracting some secretarial services, right? You get to the point where it's like, man, okay, so how much do secretaries' salaries these days, right? Because it's natural. You want to focus on increasing the income, and you also want to focus on decreasing the expenses. A lot of people miss that. But it's dual purpose. We have dual purposes as fiduciary trustees. Increase the assets and income, decrease the expenses as much as possible. So you look into it. What is it to hire a CPA? How much do CPAs get in a salary? How much do secretaries get in a salary? How much do, attorneys get in a salary from like a firm? And then you realize that the trust is paying, the estate is paying these three positions These three people, these three firms, the accountant, the attorney, the secretary, because, you're contracting them out. That's what you're doing. You realize as a trustee, the board, whatever, in the endeavor to reduce expenses at all costs and at any time, the board of trustees resolved that there would be an investigation of the annual salary of the respective positions that we subcontract: secretarial, legal, accounting. In this investigation, the Board of Trustees has realized that it would be cheaper annually to actually hire these positions in-house: legal, hire an attorney; secretary, hire a secretary; accountant, hire an accountant. That's what structure are you going to use to hire those? This is a family office. This is the first step of family office. This is what I'm breaking down. I know I talk in circles sometimes, but I always get to the point. Because I know when people ask, so I want you to talk about family office. I know what you're saying. I know what you're really asking. You're asking, tell me about it. I want to know about it. And is it time for me to start doing that? Is it time for me to start looking at a family office? Because, so I went through the training, trustee training, set up the trust. It's crazy. It's amazing what's happening. I went through the foundation training. We set up a private family foundation. Me and my wife, we set it up. And it's crazy. It's crazy. It's absolutely crazy. So I'm doing this, I'm doing that. I'm seeing all this income, and I'm seeing the advantages. It's obvious. It was immediate. We got the life insurance. We know we're using the cash value in the life insurance from the estate, and this is different. So this is absolutely different. I really want to hear you talk about family offices. I mean, if I'm lying, it's cool. It's cool. I don't think I'm lying, though. That's the first step. The first step, when you know it's time to start thinking about a family office, is when you or the board of trustees of the family trust, I don't care what it is, business trust, doesn't matter, whatever it is, when it comes to realization that these particular firms that we contract with for these particular services are costing the trust or the estate more than it would cost to hire these people or these positions in-house. It's family office time, baby. When you start thinking like that, family office time. Why? Because which structure are you going to hire? Are you going to hire them under the business trust? You're going to hire them under the family foundation? Are you going to hire them under the family trust? Are you going to hire them under one of the asset trusts or all the asset trusts? There's a lot of us. That's, business trust, family trust, asset trust, family foundations as 4 structures. And let's just assume that maybe there's 1 or 2 business trusts and 1 or 2 family trusts. We're talking about like 5 or 6 structures, realistically. And this is not unrealistic. This happens. It happens all the time. And if the family manages or owns an LLC. Now your admin structures, the business trust has, 98% ownership in this LLC, or 2% ownership in this, or 50% ownership in that. That's, we're talking about the management and the administration of a lot of structures. We are. So which structure are you going to contract them with? Check this out. If you try to contract them with every single structure, they're going to charge you for every single structure. So what you do is you hire them for the family office, give them a salary, through the family office, whether the family office is a statutory entity or not. You pay them a salary, you pay the accountant a salary, you pay the secretary a salary, pay the attorney a salary. And then as part of their duties, as part of their employment contract duties, they handle all of these structures. Hey, they can quit if they want, just hire someone else. It's going to be a much cheaper way to do it in-house once you get there. Once you get there, and then when they start complaining, just know that employees complain. You know it. You're an employee. I've been an employee before. I complained. You got to know when the complaints are getting to be serious, and then it might be time to hire them some help. You might have to bring on another attorney, or bring on an assistant for the secretary, or bring in another accountant, or an assistant for the accountant. It might be that time. And this is ultimately the organic and natural scaling of a business. And family is business. Your family is business. The family is business. It's the first business. I don't care. It's the first government. It's the first business. So, and it's all about how you operate it. So what is a family office? It's a privately held company. Or it's a private trust that handles investment management and wealth management for a wealthy family. The company, the family office, the financial capital is the family's own wealth, a portion of the family's own wealth. And, investments, management of property, real estate, commercial, otherwise, accounting, legal, secretarial. That's an office, man. Think about it. You walk into an office, you see those departments, you see those offices, those nameplates on the offices, on the office doors and stuff. You know it's legitimate. It's legit. You start saying sir and ma'am and stuff. And it's a lifetime achievement, y'all. It's not something that you just set up. It's not a hallmark of someone in the private or something. It's not a hallmark of someone who's doing what they're supposed to do. It's a hallmark of a wealthy family is what it is. It's really more than likely beyond our generation. It really is. We mentor our successor trustees properly, teach them properly, inform them properly as to business, the commercial realm, how business is conducted, how it's just business and not personal, and it's really all about the execution of the contract, the commencement, the transaction itself. That's what it's about. And teach them proper business practices, teach them what to look for, teach them how to see opportunities. Teach them, hey, if you get a bunch of money, let's say you get a windfall or a settlement or something, and it's a bunch of money, purchase a business, invest the money, make the money make money, and then use the money that the money makes to go on a trip. People get money and they just spend it. It's difficult not to. You've been taught in a consumer world. Consumerism. Everything is about you purchasing or buying something. So it's all about in the public. So we have to teach the successor trustees how to avoid that and why it's necessary to avoid that and what is actually happening in a commercial transaction, ultimately, especially when it's from the private to the public. If it's a consumer household, I'm not talking business to business. I'm talking consumer household to business. What's happening is there is value or wealth being extracted from the private, because a company must sell a product or service at a profit, which means they must get more for the products or service than they paid to, get the product or service to you, or, perform the service or something like that. It has to be more, which means there's an extraction of wealth. That must be understood on a fundamental basis in order for any proper administration to happen. For any true wealth, family wealth to grow, for any achievement of a lifetime it requires proper knowledge, proper understanding. It requires a proper foundation. It really does. You like how I just brought all that full circle? I know. I'm just playing. That was luck. I didn't even think about it. But, it's something that we can achieve. Now, is it taught to get to 100 million? As an employee, yes. If we've been taught and only looked at the world and commerce and economics and property and cars and, just possessions. If we've only looked at them from the perspective of an employee with a ceiling, with a limited income, a predictable limited income, it's difficult to imagine $100 million. It really is. But once you change your mind, that's why I say going private is a lifestyle. It's not, I'm going to throw out some documents and I'm going to do this and that, and they're just going to recognize and it's going to be fun. No, you're going to have to enforce. You're going to have to enforce the law because there's no law enforcement for the private. The only thing they protect is your life and your property. And you got to deal with the sheriff. But I'm not even going to get into that. There's no law enforcement with regards to nothing when you're dealing privately. The only enforcement is an equitable court because they can rule to whether or not there was a breach of contract and subsequently, adjudicate. That's it. You pull the statutes, now you don't pull your trust into the statutes. You don't pull your private estates. If you're trying to claim the benefit of the statute, while administering a private entity, just saying that makes me want to go brush my teeth. But these things need to be understood on a fundamental level. But when you look at commerce, when you look at the public from the aspect of a private trust administrator, from the position of creditor, from the position of owner, it's different. And $100 million isn't that much money. And people are like, man, you tripping, $100 million. Man, look, think about it. Think about it. What did I just say? What did I just say? Look, that's all I'm going to say. I don't do that dance. But, yeah, man, that's my take on family office, y'all. Hopefully I trust that I was able to satiate that, inquiring mind with regards to family office. What am I saying? Hey, you ain't ready. Why am I saying you ain't ready? Because I ain't ready yet. Unless you got bread on bread on bread on bands, on stacks on stacks on stacks, on racks on racks on racks, in carts, in carts, in carts, you ain't ready. $100 million. You got $100 million investable capital. That's an investment. $100 million. You get to $100 million and you take the whole $100 million and invest in a family office. That's an investment. That's shaky. You don't be one of them hover helicopter bosses, always there asking all the questions, driving them insane. They're gonna quit on you. Like I said, this is multi-generational wealth when you're dealing with private estates. I'm not attempting to discourage you. I'm just attempting to put it into perspective. And, as I said, the name of the show, Family Office, a lifetime achievement. Something that you should be looking to achieve in your lifetime. But as of now, we got to focus on growing that wealth of the estate. We got to focus on, adding assets to the asset trust. We got to focus on creating, income for the family trust and the family estate, as well as then it's got to be recurring income. Usually starts sporadic, and then once you get that recurring income, and you keep the expenses low, that's the thing. Grow the income, reduce the expenses. Once you get there, and then you start adding more and more wealth and more wealth, and look, $100 million, you're gonna have. It's gonna be a lot of real estate. It should be. It shouldn't be just $100 million cash and some stocks and stuff. People say I'm worth $100 million. My net worth is this. They're counting all their real estate. Please believe me. The largest portion of wealth, of wealthy families, wealthy private families, the largest amount of their wealth is going to be held in real estate, whether commercial, residential, or agricultural. It doesn't matter. That's going to be your foundation of wealth when you start getting to family office level. It's going to be real estate. It's going to be land. And then you're going to have investments. You're going to have holdings. You're going to have cash. It's going to all this. You're going to have that in the estate. But when they say $100 million, they're including a large portion of real estate. So there it is. Family office, a lifetime achievement. I appreciate y'all checking out the show. I'm going to get up out of here. I got places to be. But I love y'all. And yes. The show's live. It's live. I'm back. I had a really busy day. I still did the show. That means I'm back. That means I'm back. And my day isn't even over. That means I'm back. I love y'all. I appreciate y'all. I trust that you learned something from this episode. I trust that you have received some actionable information that you appreciate. That's really all I'm attempting to do. It's just the goal, relay this foundation. Be sure to email me, admin@welcometothefoundation.com. Sign up for the email list, book a consultation, ask and inquire about trustee training. We got some modifications going on with the training, man. Hey, it's we show for, man, I've been on high frequency for over 6 years. And I'm not saying anything, I'm just saying, you know what I mean? We got about 60 seconds left, but I'm going to end the show, so I definitely appreciate y'all. I really do, man. Y'all are the greatest. Straight up. But yeah, email me, admin@welcometothefoundation.com. What's up with trustee training? What's up? Quit playing. We're playing with your estate. We're playing with your life. But no, it's great to be back. It's 100% great to be back. So yeah, check me out. WelcomeToTheFoundation.com. Like I said, sign up for the email list. I trust y'all had a great day. We'll have a great week. You enjoyed yourself. Take care of yourself. Make sure you say 10 things that you are thankful for before you go to sleep tonight and every night, as it is important. And I will catch you next week on the hottest radio network on the planet, High Frequency Radio Network. I'm your host, Sot L, here on the Foundation on High Frequency Radio Network, and it's been a pleasure. Y'all enjoy yourself. Peace to the gods.
High Frequency Radio.